I'm about to show you guys the best setups you can take, and they are known as my A plus setups. A lot of different rooms categorize your trades as A plus, but they lack the consistency and they lack the detailed plan that we provide in the StockX mentorship program. Our A plus setups are completely different. We pre-announce it, we give you the strike and the entry price of the play that we want to get into, and we then target minimum 50% or higher. We even started a small account challenge that has more than doubled by using these A plus setups. So if you are a new trader or a trader that has been struggling in the past, I'm about to showcase to you how these A plus setups work in our Discord and how the option premium revolves around finding the best entry points. Understanding the market structure and dynamic is rule number one. The second thing that matters the most comes down to being patient and diligent and finding the right entry point. Now, these setups I'm about to explain to you, we observe option premiums, but we align that option premium into our charting analysis to make sure that the numbers correlate. I do have a model that helps me figure this out, and unfortunately I cannot share that, but I will definitely describe to you how the focus is designed and how we manage to find these specific entry points based on what we're looking at. So let's get into it. So today we've seen the S&P 500 move in a very choppy range. We've seen the market show a high close to our first inflection point, which is around 65.10, and pretty much find a bottom at around 64.83. Now, starting our day off, like I mentioned, rule number one when it comes to these A plus setups is you gotta understand the market structure. So in our Discord, every morning we provide what's called our gamma report. In this report, we describe the market in a very simplistic way, giving you the education you need to understand what's exactly happening and what's moving in the market. In this opening statement, we mentioned that the key trading range is between 64.72 and 6,500. This is very important to know because we mark these numbers at a pre-market high and pre-market low before this report comes out. We also outline what sectors are currently moving the market. Today, we've noticed that the techs and semiconductors sectors were strong. The energy sector was also moving. In the energy sector, the oil was up simply because OPEC decision was coming out, and they're pretty much cutting production, and some people are increasing it. So that's driving energy sector higher. And we noticed that the financials were flat, and healthcare sector was pretty flat as well too. We mentioned here that the call gamma shows a normal distribution. So normally when that happens, we expect a little bit chop. I said the probabilities for the call gamma are located within 64.80 and 65.10. Now, looking at this here, this is timestamped prior to market open. You can see that 65.10 was pretty much near the top here, and that's what this report outlined. That's where majority of the probability is. Going back down, our report gamma shows that if SPX trades below 64.90, expect a lot of continued sell pressure, which we have seen. And after all that information, I gave the edge to the downside and mentioned that if SPX goes under 64.90, you might see some selling pressure. And this right over here is our main SPX map that gives us an idea where the breakout zones are, chop range, and so forth. Now, in the chat today, we've gone over numerous plays, but I'll start from the start. So at the start of our trading day, we always provide a morning call, which goes over our key strategies and where we see the market happening here. The first thing we did is we sold our Tesla 380 call here, which was a perfect sell because we've noticed that Tesla looks weak. Since we've identified that Tesla looked weak, we decided to buy these Tesla 340 puts at 2.61. This was an awesome trade. Now, going into our charting analysis over here, this is what we provide at the beginning of the week. So we've seen that Tesla pretty much hit our first inflection point, usually or close to there. And because of that, we decided to sell our calls and transition to the puts. We know that when the stock hits this first inflection point, this is where call premiums are very expensive, and this is where the demand to write these premiums is very high. So that's why we decided to get these puts here at this specific price, and that was near the morning open. Basically, we got it around 9:39 here, and as we go along throughout the day here, we pretty much are, you know, focusing on our Tesla play. We didn't do much with SPX, right? So in our war room here, I forgot to mention is that you can see our level 1 bullish is at 65.09, which is exactly where the top here is. Usually I would short it here, but we already had a short on Tesla, so we were okay. And then going back down here, so we banked on the Tesla calls, we took the puts, and during that time here, we also placed an order to buy Broadcom. This was very close, actually. This was 10 cents away from the fill, but it didn't get filled. So unfortunately it did. We bought the Tesla puts right after. That's an A+ setup. And as we go along here, you can see the Tesla start to move. Took a little bit of time. The price action was a little bit slow here. We were into Microsoft right now, and that was a high risk swing because it's our D+ trade that we called it. So we're going to be pending on the results of that. We've noticed that those calls, the puts on Tesla started to move, and eventually we decided to sell it for close to around 50% at that point. It actually went to a double when Tesla broke under 345. Okay, the next thing that we did, and this is an example of how A+ setup works. So at 11:05 a.m., which was basically right around here, so close to this point over here, we decided to buy some calls. We placed an order to buy SPX 6510. Now, this is very important thing about this A+ setup, right? So I recognized that the call premiums were going to be going lower, and I knew exactly where the top range was because 6510, we rejected off there. So we knew that was going to be the best entry for the calls. You don't want to pick any strike higher, because if you do, the deltas are going to be too low and you're going to be screwed. This is where most traders mess up, where they jump into a play, don't understand how premiums work, and they realize that the strike that they have picked is out of bounds or out of reach. So because we've have evidence at this specific time that this was the top range, then we knew that this strike would work as an A+ setup. So once we did that, we did it for the small account as well too, which is a $500 challenge account. You can see we put the order there, it got filled. We placed a sell order at 30%, which is 90 cents, and it got filled, and that's our closing balance there. But so far, SPX, as soon as we managed to do that, we also tried to place another order for Tesla puts. That didn't get filled. Once this order on SPX, as we go down, now most of the time my orders on SPX tend to fill, but sometimes those swings may not, and that's totally fine, right? Because if it doesn't fill at that specific price, I usually don't like to chase it. And we got the fill an hour later at 12:37. So that fill happened once SPX hit this lower WAP. So based on my A+ setups, I'm able to basically figure out how the pricing works, where it's going to go around this range. So based on my calculation, I monitor the range, I monitor the pricing, and I also monitor at what point it gets there. So if we look closely over here, you can see that the time exactly that I'm showing you guys is around 12. So we 12:37. So 12:37 was around this point over here. Okay, so that's the time we got into the fill on SPX, and right away we got a green candlestick here. Okay, on that green candlestick, this thing managed to hit 30% plus. So for those traders that need to take profits immediately and want to scalp because they have a small account, or they just don't have the risk tolerance to hold, you can see right over here, this hit our standard minimum at 54%. My goal was to actually have this hit at the upper WAP, and it did not happen. But based on my model here, As long as it hits minimum 50%, then my job is done. If it hits 50% and goes back down, we consider that a good trade regardless, because 50% is what I use as my baseline to confirm if the trade is good or not. So it hit that that portion here, and as we go down, it pretty much fluctuates that, and eventually it hits 70% again. Now, I've been playing these A+ setups for at least 2-3 years, and I've accumulated a lot of capital doing these plays. Sometimes I'd even want to sell it at 70%, 100%, or whatever if my risk tolerance is high. Because I made money on those Teslas, you know, on both sides, I had a higher degree of risk tolerance, and because I see potential that I personally thought that it could go to the highs, that's why I held longer. But it's always encouraged to take profits so that way you can build your account and take those shots whenever you have that. Okay, so we tried to place, and we placed another final SPX order, and we call this one a scalp. That's very important because it was meant to be a very quick trade. So we want to get in, we want to get out. So we announced that at 116. So that's around over here. So 116. We announced it near the bottom here, expecting SPX to pop. And later on, what happened, this play later filled at the last 10 minutes, right? A lot of people are asking, hey, am I going to hold it through? And I actually said I wanted to, but it was going to become more of a lotto play, right? So as we go down, we got the fill on 64.90. The room has confirmed that they got the fill as well, and it was a fast scalp that managed to give you 110%, sometimes even 70% and so forth. So if we give you the predetermined entry price and the strike price that we want to get into, there's no way you can ever miss it, right? So this quick play here, which I took at 348 and sold at around 350, which was 2 minutes, we managed to make a double. And this was a normal size play here, okay? Because of course, as I mentioned, I have a high degree of risk. So got out of that, made my money, and that's examples of A+ setups. So if you guys are ready to take the next step in your trading journey and get these setups, which have a known 90% consistency, we can definitely help you in this mentorship program. Okay, all these trades are pre-announced. Now, the thing here is that I run a very tight community. I don't aim to have 1,000 members in my community. Otherwise, getting these orders are going to be filled. So with that being said, as more people join my mentorship room, we provide a lot of coaching, and because spots are limited, prices will increase as a result of these A+ setups. We want to make sure we don't have a zoo in the room, and we also want to make sure that we can still get these A+ setups, because if there's thousands of people that are putting orders to buy these trades, then it's going to be very hard for it to work for the majority of us. That's why the next set is that once we get 30 more members, the price of this mentorship program will eventually double. So I hope you guys enjoyed this lesson on how A+ setups work. We plan our entry prices, we look for the market structure, and we understand the range, so that way we can make the best decision on how that works, right? Every trade that we dropped today, not including Microsoft because it's still in progress, we managed to successfully do very well. So thanks for tuning in. We'll see you guys in the next one. And like always, let's get that money.